Good morning, spinoff investors. This is Greg Miller and coming at you with another video. Today I'm talking a little bit about puts and how I've used them for a recent spinoff and how it's turning out. Check it out, guys. Hey everyone, this is Greg Miller from Spinoff Investing Simplified. I'm your host here at Spinoff Investing Simplified's YouTube channel. And I appreciate you stopping by and taking a look around. If you appreciate this video or any of the others, please subscribe to our channel. We would love to have you along. We also appreciate your comments, and smashing that like button helps us out with the YouTube algorithm. We sure appreciate your time with us and hope you enjoy this video. Thanks a bunch. So one of the ways that I use options is I sell cash secured puts on specific investments that I think are attractive. And I'll be talking about the Smith and Wesson today, but you could do this on pretty much any spinoff that is large enough to make it worth your while. First and foremost, for some of my viewers, you may not know what a put is. Now, the put is a contract to sell typically 100 shares of a company at a certain price. So if the underlying shares fall in price, then the owner's gains are protected from loss if they own the shares. If they have sold a cash secured put, then their losses are increased because that particular share price has gone down, and their cash, they have to sell it at the inflated price. Options typically are contracts for at least 100 shares. There can be changes to those, but normally that's what happens. You will find that if you purchase options or sell options prior to a corporate event, like we do with spinoffs, you might find that they change in value and what the contracts are for throughout the lifespan of the contract. So just something to pay attention to. It does get a little bit convoluted and a little bit difficult to understand sometimes for people, but usually the underlying value has not changed. So how can puts be used while investing? If you're determining, and this is the way that I use them, there's a couple of different ways, but this is the way that I use them, and I'm going to be talking about how to enter a position with a company, not necessarily exiting, which is the other side of this. But to enter a position, you determine that what the company is worth, and if it's fairly valued at $20 a share, then you can sell cash secured puts to lock down the prices at that $20 a share price. And basically, you're being paid to enter a position at that price. That's how I like to do it, just because I like to get paid to enter company share prices, or companies at certain share prices. Let me give you an example of how this has worked for a recent trade that I've been working on. So back in January, I was looking at Smith and Wesson Brands. They announced that they were getting ready to spin off their American Outdoor Brands business. At the time, they were actually called American Outdoor Brands, and they were going to keep the Smith and Wesson Brands as the parent company. I spent some time looking at the company. I estimated that the share value was about $13 a share for the intrinsic value. I want to commit about 10% to 20% of my portfolio. So I committed at that time $2,700 to it. And this is what I did. On January 7th, I sold a $10 put for $2.50. And then on January 7th again, I sold a $9 put for 85 cents. They have different expiration dates. The $10 put, I put all the way out to the 15th of January, 2021. And the $9 put I put to just last month, the 19th of June, 2020. Then, if you were paying attention to the coronavirus, that had significant adverse effects on this particular company. It was trading down to about $5 a share around March 10th. And so I sold an $8 put at $2.50 for the contract. And that expiration was at $15 on 15 January 2021. So over the 3 months that I spent kind of opening up my position, I received in my account in cash $535. And I made sure that I had secured in cash $2,750. So about a 20% return is what I was looking for this. Now, current results of what's going on with this. The contract that expired last month gave me $85 for the 6 months of return, and I basically risked $9 per share on that. So at $100 or 100 shares, that's $900 risked for $85 return over 6 months. That gives me an annualized return of about 18.9%. The beauty is that because it came out of the strike price for me, the strike price was 9. And if you don't understand the strike price is the price at which the contract either has to be purchased or sold. And so I sold it saying that I would buy the shares at $9. I sold the put at 9, saying that I would buy the shares at $9. Well, in June, things started to get pretty heated. People were getting all worried about the George Floyd issues, and that turned into a lot of people buying a lot of guns. Well, Smith and Wesson sells guns, and it started to really explode to the upside. Now, some people might say, hey, well, you missed out on all this upside return. I'll talk with you next week about that. Next week, I will talk about buying a call with the proceeds from the put. And you can kind of see how you can play both sides of this if you're really long on a company. So anyway, that's one of the ways that I use to enter positions is to sell puts. And so far, it's turned out pretty good for me. Sometimes they go bad. I won't say that you can't lose money on this. Sometimes it can, like if the share price had stayed below $5 a share, then I'd be buying the company at that $9 a share strike price. So just realize that if you're going to do this, you need to make sure that you have cash in your account to cover the particular price of the company at the share price that you're interested in. Some trading companies will allow you to sell puts without the cash on hand in order to cover this, but that's not the game that I play, and I like to make sure that I have cash on hand, and 20% return is good enough for me right now. So thanks. By the way, if you like this type of video, please let me know by liking it and subscribing to the channel on this video. And if you'd like to have me put more information out there on this type of trade, let me know. You can ask me in the comments. You can always hit me up at spinoffinvestingsimplified.com and sign up for my newsletter, my monthly newsletter there. And happy 4th. Thanks, guys. As we finish up, we have one final note for you. This video was made for educational purposes only. Any companies mentioned in this presentation were discussed for educational purposes only. Discussing such companies and the specifics about them is for illustrative purposes only and not a solicitation to purchase them. We recommend that you conduct your own research and identify why you might want to own the company yourself before you commit any funds. We also recommend that you seek the services of a financial advisor that has considered your situation as your fiduciary. May your education here grow your knowledge, improve your personal investing performance, and give you the confidence to take control of your future. Thanks.